When Warren Buffett makes a move, Wall Street pays attention. His every decision is scrutinized by investors, analysts, and financial journalists around the globe. After all, Buffett's track record is legendary. He's built Berkshire Hathaway into a financial powerhouse, and his investment philosophy has shaped generations of investors. The Oracle of Omaha, known for his disciplined, no-nonsense investing, just shocked the market. This isn't just another headline. This is a move that's sending shockwaves through the financial world, making even the most seasoned Wall Street veterans sit up and take notice. In Q3 2025, Berkshire Hathaway made a single, massive new investment, not in railroads or insurance. This was a $4.4 billion leap into the tech world. For a company that's built its reputation on steady, traditional businesses, this is a dramatic pivot. It's a signal that even the most conservative investors recognize the unstoppable momentum of technology. For years, Buffett avoided tech, claiming he didn't understand it. He famously missed out on early opportunities in companies like Amazon and Google, sticking to what he knew best. But now, he's betting big on a company at the forefront of artificial intelligence, a sector that's rapidly transforming industries from healthcare to finance to entertainment. This isn't just an investment, it's a statement. Berkshire has been a net seller for 12 straight quarters, amassing a record $381.7 billion in cash. That's more than the GDP of some countries. The company waited patiently, then struck with a $4.4 billion swing for the fences. Moves like this define legacies and signal seismic shifts in the investment landscape. So, what does this mean for you and your portfolio? Let's unpack the story behind this game-changing bet, explore the company at the center of it all, and see what lessons we can learn from Buffett's boldest move in years. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. The tech giant Buffett just bought is Alphabet, the powerhouse parent of Google, ticker symbol GOOG and GOOGL. It's a symbol that's become synonymous with innovation, data, and the digital age. But now, it's also the latest obsession of one of the world's most legendary investors. From its humble beginnings as a search engine, Alphabet has grown into a sprawling tech conglomerate, shaping the way billions of people interact with information, entertainment, and technology every single day. Warren Buffett, the Oracle of Omaha, just made headlines by snapping up nearly 18 million shares. That's not just a casual investment, it instantly catapults Alphabet into the top 10 holdings of Berkshire Hathaway, a portfolio known for its discipline and selectivity. This is Berkshire's boldest tech play since its legendary bet on Apple. And if history is any guide, Buffett's tech picks tend to pay off handsomely. Remember, Apple was once considered a risky move for a value investor, but it became Berkshire's crown jewel. For Berkshire, a $4.4 billion stake isn't just a number, it's a massive vote of confidence. Buffett and his trusted lieutenants, known for their patience and rigorous analysis, saw a world-class business trading at a price too good to ignore. They don't make moves like this lightly. Alphabet is far more than just Google search. It's a collection of some of the most influential platforms and technologies on the planet. YouTube, the world's video giant. Waymo, a pioneer in self-driving cars. Android, the operating system powering billions of devices. And Google Cloud, a rising star in enterprise tech. This is a tech empire with a competitive moat wider than the Grand Canyon. Its dominance is protected by scale, data, and relentless innovation. Buffett's move signals that value investing isn't shying away from tech anymore. It's embracing it, but only when the fundamentals are rock solid. While others chased the latest tech fads and hype, Buffett waited patiently on the sidelines. He watched as Alphabet's stock lagged, undervalued by a market distracted by flashier names. When the opportunity finally appeared, he moved decisively, seizing a moment others overlooked. This isn't a speculative gamble. It's a calculated, disciplined move rooted in deep research. Alphabet's dominance, relentless innovation, and attractive valuation made it irresistible to a value investor who rarely bets on tech. Buffett isn't chasing trends or following the crowd. He's buying the future at a price that makes sense, sticking to his principles even as the world changes. This is classic Buffett. Find the outlier, act with conviction, and let time do the heavy lifting. The Grandmaster just made his next move. And as always, the world is watching to see what happens next. Why Alphabet, and why now? In Q3 2025, tech stocks were soaring, except Alphabet. While peers traded at sky-high valuations, Alphabet was just 23 times forward earnings, the cheapest in the Magnificent Seven. For Buffett, that's a dinner bell. Alphabet's dominant market position and profitability were on sale. Google search is a virtual monopoly, printing money day and night. Buffett loves moats, and Alphabet's is among the deepest. While others chased momentum, Buffett focused on fundamentals. He saw the market undervaluing Alphabet's quiet, consistent power. He wasn't buying hype. he was buying a world-class business at a discount. This is value investing at its finest. Discipline, patience, and clarity. Even in a high-tech world, price still matters. Buffett's move is a masterclass in ignoring the noise. Sometimes the best opportunities are hiding in plain sight. You don't bet $4.4 billion unless the numbers are rock solid. Alphabet's Q1 2025, its first ever $100 billion revenue quarter. This isn't a startup, it's a money-making machine. Google Cloud, once a laggard, is now a powerhouse, fueling growth and profits. Alphabet is no longer just about ads, it's a diversified tech titan. The stock surged nearly 50% this year, driven by renewed confidence in its AI strategy. Net income is soaring, margins are expanding, and free cash flow is piling up. This financial strength lets Alphabet invest in AI, buy back stock, and weather storms. Buffett bought not just a story, but a fortress balance sheet. When Berkshire invests, it's in companies built to last. That's the foundation of a sound investment. Let's talk about the real engine behind the world's most powerful search tool, artificial intelligence. While most people see Google as just a search bar, beneath the surface, it's a technological marvel powered by some of the most advanced AI systems ever built. This isn't just about finding answers faster, it's about transforming how we interact with information itself. For a brief moment, the market was gripped by anxiety. Investors and analysts wondered if Google was falling behind in the AI race, especially as competitors made bold moves and headlines questioned Google's leadership in this new era. But what many missed is that Google has quietly been an AI pioneer for over a decade. From early breakthroughs in machine learning to developing neural networks that power everything from translation to image recognition, Google has been laying the groundwork, waiting for the perfect moment to reveal its hand. In 2025, that moment arrived. Google unveiled AI overviews in search, a revolutionary upgrade that instantly reached 2 billion users worldwide. Suddenly, search wasn't just about links, it became a conversation, with AI summarizing, contextualizing, and personalizing results in real time. This isn't a niche feature tucked away in a corner. AI Overviews is now woven into the fabric of the world's most visited website, touching nearly every internet user on the planet, every single day. The impact was immediate and profound. Global search queries jumped by 10% as users found themselves engaging more deeply and frequently. This surge in activity didn't just mean more searches, it meant more opportunities for Google to monetize, analyze, and improve. Google isn't simply adding AI as a feature, it's fundamentally integrating AI into its core infrastructure, reimagining what search and the entire web experience can be. Here's the secret sauce. Every new user, every new query, makes the AI smarter. This creates a powerful feedback loop. More users mean better AI, which attracts even more users. It's a cycle of improvement that competitors struggle to replicate at this scale. While other companies are busy building new AI tools from scratch, Google is seamlessly bringing advanced AI to billions already within its vast ecosystem, across search, maps, Gmail, YouTube, and beyond. That's why Warren Buffett's bet is so significant. He believes this deep AI integration will fundamentally redefine Alphabet's growth trajectory, unlocking new value far beyond traditional search advertising. With unmatched data, world-class talent, and a global reach that's second to none, Alphabet holds an unfair advantage in the AI arms race. Its resources and scale are simply unparalleled. The market is finally starting to catch on. Alphabet stock is surging, and investors are celebrating. But for Buffett, the real party is just beginning. He sees a future where AI drives even greater returns. Buffett is betting that Alphabet's AI-powered future will not only eclipse its search-dominated past, but also set a new standard for what's possible in technology. This is more than an upgrade, it's the dawn of the next chapter in tech dominance, with Alphabet leading the charge into an AI-driven world. While AI grabs headlines, Google Cloud is the unsung hero. Once a costly experiment, Google Cloud is now a major growth engine. In 2025, it's winning enterprise customers with cutting-edge AI and security. Companies need powerful cloud infrastructure for AI, and Google Cloud delivers. Its AI tools and custom hardware make it the go-to for next-gen businesses. Now profitable, Cloud transforms Alphabet's financial profile. For Buffett, this diversification reduces risk and opens new growth paths. He's not just buying search, he's buying a leader in the trillion-dollar cloud market. The synergy between cloud and AI is a powerful competitive edge. As AI demand grows, so does Google Cloud. Buffett's betting on this flywheel. Success in one area drives growth in another. Alphabet is now more than the sum of its parts. Alphabet is cruising near the top of the market, carrying a market value of roughly $3.36 trillion, a clear reflection of investor confidence in its long-term AI-driven growth. The stock currently trades at a price-to-earnings ratio of about 27.3, supported by earnings per share of roughly $10.14, showing that investors are willing to pay a premium for consistent profitability without venturing into overly speculative territory. The company generated an impressive $350 billion in revenue in 2025, powered by the continued dominance of its search and advertising business, along with fast-growing contributions from Google Cloud and its expanding portfolio of AI tools. Alphabet also delivered a strong bottom line, reporting net income of about $100.11 billion, demonstrating the company's ability to convert massive top-line numbers into equally powerful earnings. Altogether, Alphabet remains a textbook example of growth at scale, massive cash flows, dominant market positions, and emerging AI-driven revenue streams that continue to push the company forward. To understand the Alphabet buy, look at Berkshire's other moves. In the same quarter, they trimmed their largest holding, Apple, selling 42 million shares, over 15% of their stake. Apple remains Berkshire's biggest position, but the selling is telling. Why sell a winner? Valuation. Apple's stock soared, making it prudent to take profits and rebalance. For 12 straight quarters, Berkshire has been a net seller, swelling its cash pile to $381.7 billion. Buffett is signaling that most stocks are expensive. He'd rather hold cash than overpay. That's what makes the Alphabet buy so powerful. In a pricey market, Buffett found one tech giant worth deploying billions. He sold some Apple to buy a cheaper, high-growth Alphabet. It's a strategic pivot, favoring value and future growth. This isn't just about Google. It's a relative value play between two titans. Buffett's actions speak louder than words. Buffett's Alphabet bet is a masterclass in value investing. It's about ignoring hype and buying great businesses at sensible prices. That discipline and patience have built more wealth than any other strategy. Learning this skill takes practice, analyzing fundamentals, calculating intrinsic value, and waiting for the right moment. That's why we're proud to be sponsored by the Value Investors Master Course. This course breaks down Buffett's approach, teaching you to think like a business owner, not a gambler. Real-world case studies, simple lessons, and actionable frameworks await. Stop chasing hot tips, start building real knowledge. Link is in the description. Now let's get back to what Buffett's move means for the future of tech investing. Buffett's Alphabet bet is part of a bigger shift. For decades he avoided tech, sticking to simple, predictable businesses, but the world changed, and so did Buffett. He realized the biggest moats now belong to tech giants. His Apple investment stunned Wall Street, but he saw it as a consumer brand with a sticky ecosystem. That bet paid off massively. Then came Amazon, a nod to e-commerce and cloud dominance. Now, Alphabet fits the pattern, a deep moat, unassailable dominance, and a direct play on AI. Buffett and his team are now seeking foundational technologies shaping the next era. This evolution shows why Buffett remains a master, adapting, learning, and empowering his team. The playbook isn't just insurance and railroads anymore. It's about untouchable franchises, now built on code and data. Buffett's tech strategy: buy the most dominant, essential, and reasonably priced titans for the long haul. The future of value investing is here. Buffett's $4.4 billion bet on Alphabet is a lesson in value, timing, and adaptation. He bought a wonderful company at a fair price, rotating out of high-flying Apple into undervalued Alphabet. The question now, is it too late for the rest of us? The stock's up nearly 50% this year, but Buffett's horizon is the next decade. He's betting AI and cloud will drive growth the market still underestimates. The world's greatest investor just gave Alphabet a powerful endorsement. Want more insights? Join our Patreon community for deep dives and exclusive content. Now I want your take. Is the AI revolution already priced in, or is there more upside for Alphabet? Drop your thoughts in the comments. I read everyone. If you found value here, like, share, and subscribe. See you in the next one.